Hey, good morning, everyone. I hope everyone is having a great weekend. So, for next 30 minutes, I'll show another great tool. So, as you most of you know, our indicators are working great, giving 80-85% success with earnings, with stocks, options, futures, currencies. And then I want to show you another tool which we are working on. Very soon we'll roll out to all the customers. But I want to give a quick demo, and I want to show you how good it is working. And then I'll give some examples also, right? Already I shared few which moved as expected, and also I am going to share few which can move in the coming week. So let me share the presentation. And while I explain, if you have any questions, you can always post in the chat window. So, so trading is all about, right? If you know the core concept behind trading, is all about history repeats itself, right? That means if, for example, you call it as support, resistance, right? What do you mean by support? That means at some point of time in the history, people bought that stock. So whenever it comes to a support, it goes up. Or what do you mean by resistance? In past, people sold the stock at that particular price, and then that will become resistance. That means it is all about historical results, how in the past it performed. Based on that, we buy the stocks, we buy the futures, or we buy them or we short them based on the historical, right? Our indicators capture that in the form of support resistance, and that does it. So what we are doing in this new tool is we are basically looking at last 35 years of data, right, for different stocks. And then we are checking there are certain weeks or there are certain periods where some stocks consistently move during the time, right? Nearly 90% of the time in last 35 years, if a stock is moving in particular weeks, that means there is some seasonality associated or there is some logic behind those. If stock is moving in those area in that, if I buy in that week, definitely there is very 100% chance that stock will move up, or 90% chance stock will move up, like that. So this tool will tell us when that profit zone or when the green zone starts, we can buy the stock, we can buy the calls, we can buy the right option bull puts, and whenever that season ends, then we can basically sell off those stocks. In the same way, we can identify there are some common weeks where the stocks will continue to drop. That means last 30-35 years, every time or 90% of the time during those weeks, the stock will drop. So that is what this tool will help us to identify what is that common week in last 30 years, 35 years, where it consistently or 90% or more it moved up, or what are the weeks in which a particular stock moved down. So that is what this profit zone indicator, which will help us. We can buy the stocks or we can buy options and we can make huge money. So in the first week of January, right, I shared you. So for example, when you use the website, you will see something in this form, right? It is telling that in January, it can move up again from 30th January to 20th, 24th February. This Amat stock will move up, and again from during this period, it will move up. This is a profit zone. 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 This is where it will definitely drop. So you can see some dates, right? For example, here you see 3rd January to 18th January. There is a profit zone, right? That means we have 90% chance if we buy the stock, if you buy bull puts during this time, there is very huge possibility for us to make nice gains. In the same way, 30th January to 24th February for this stock, if you buy, there is a 90% chance this will move up. So based on last 35 years of data, we are identifying those zones, right? This is a green zone. That means we can buy calls, we can buy stocks, we can do bull puts. or this is a red zone where we can sell the stocks, we can buy the puts, we can do the bear calls, like that. So for every stock, or right, whichever stock we have data more than 25, 30 years, we identify those profit zones. So for example, now, right, even in the US equities, in the premium channel, everywhere I share this, right? I'm not sharing after the fact. Before itself, I told you that MAT can move up well. So if you see, right, can you see what is the first profit zone in this year, 2025? Can you put it, right? What is the exact dates? In 2025, where is the first profit zone? Right, it is, it is 3rd Jan to 18th Jan. So this is the second profit zone. The first one is, if you see the dates here, 3rd Jan to 18th Jan. Second one is 30th Jan to 24th Feb. And then we have 12th March to 27th March. So for this stock, these are the weeks where we can see some nice positive growth. So now let's go to our trading view and check this, right? Whether how the stock performed. So if I go here, right, I'm going to trading view. I'll check for Amat. So if you see here, right, approximately from 3rd Jan, stock was around $165 and it went all the way up to $192 now, right? If you are again, right, you may feel like, oh, because it moved, he's showing this, right? But if you go here to US equities and check on Amat, so on Jan 5th, I said our profit zone indicator suggesting Amat is a good stock to go long tomorrow and should keep moving for next 2 weeks. We will buy Amat calls at the right time. So we bought and we made profits in the options channel. Last 15 years, Amat was consistently bullish from this date to this date. So do you see the magic, right? From nearly $160, now we are at $192. Right? In 2 weeks, it is nearly 10-15% growth with the stocks. Or even if you do a bull put spread, you are at a discount, you have huge buy order blocks, you have you can keep all the premium what you collected. If you buy calls, right? You are collecting premium. With that money, you buy some one or two calls. That would have made 100%, 200% returns. So, right, that is one example. Let us go to one, right? Let us see multiple examples so that you will understand. Then Marvel, right? 6th Jan to 26th Jan is the first profit zone indicator, right? So let's go to Marvel. And again, right? Again, if you go here, US equities or to the premium, I mentioned that. So yeah, Marvel looking bullish in both of our best tools, right? I shared it on Jan 5th. So you can see on the day it is around $180, right? I shared the screenshot. I said that, right, in our premium, our price pulse, top trend, our profit zone indicator, everything is telling Marvel is looking good. So now if you go and see Marvel is over $125, right? That is nearly a 10% gain. So again, if you did some bull put spreads or you bought some calls, that would have made huge gains. Now let's go with some other example, right? Micron. Again, if you go, right, where is the first profit zone for Micron? Where do you see the first profit zone dates in 2025? right? That is from Jan 1st to 16th Jan. If you see this entire list, you can just, or you can see here you have Jan 1st to Jan 16, then again in the Feb. So these are the weeks where every year it consistently moved up. So again, right, you go and here check for Micron. So yeah, right, I shared it on Jan 6th. So on Jan 6th, you see our price pulse and T5 also shows the confluence as our profit predictor. 95 to 100 is possible in coming with Micron. So it was right on Jan 5th, it was approximately $89. So now if you go and check for Micron, it is over $105. So again, right, from Jan 4th, it went all the way to 105, 106. Now it is close to SLZO. So from $89 or right, $89, it went to 105, nearly 20% gains. So in all you right, either you can buy the calls or you do a bull put spread here. You sell 85 put, you buy 80 put. Then if it moves up, you can make huge profits with a minimal risk. If you buy calls, if it moves up, that is good. But even if you do a bull put spread or you buy the stocks, your risk is very, very minimal. You can nicely. So one is your profit zone indicator is telling us what dates it can move. Then we can come here and you can check that, okay, now my price pulse is also at a bottom. So definitely I can see a lot of buy orders, it can go up. Or Amat is at a bottom, it came all the way to the bottom. Now it can go up. I can see a lot of buy order blocks can go up. So now you have a confluence, right? One is telling based on last 35 years of history, it is telling that these stocks can go up in these weeks. When we know that information, if you go and check in our price pulse, our T5, right? T5 came all the way to the bottom. It started going up. Price pulse came all the way to the bottom. It started, you can see a lot of big companies are buying huge. So like that, there are hundreds of examples I can show where the tool is exactly telling us, for example, ASML, right? What is the first date you see in the year? Right, yeah, everyone got it. So just I want to make sure everyone is understanding it. So that's why I'm asking questions. So yeah, 7th Jan to 23rd March is where every last 35 years it consistently moved up during this time, made around 10% growth. So again, if you go here, check ASML. You can see that from 3rd January it went up, some small pullback, it went up, and it can go all the way to around $860. Right. So now if you buy bull put spreads, there is a high possibility for us to see around 860 by end of March. So it is still very bullish. So if we are doing a bull put spread here, your risk is minimal. Whatever premium you collected, you can keep all the premium for yourself. So like that, this tool will help us to identify where the right historically last 35 years, what are the common weeks, where it was going up, and we can use our price pulse, our T5, our top trend. They will help us to I, sure, right? For example, I can go and if I hide price pulse, just enable top trend. I see there is a bicycle. It came to the bottom. I got a buy. It went all the way up. Some small pullback. Again, I got a buy. And if maybe next week, if it breaks this resistance, it can go all the way to $850. Or it might do a pullback one more time. Go, but I have a potential for 850 in the coming weeks. So we can take March expiry like that, right? We can go 1 month, 2 months away, collect the premiums. Then your risk is minimal. So you can use any of the indicators for the confluence. And if our profit zone indicator is telling that, yeah, this is the dates where this stock moved so much in last 35 years. And if our price pulse and T5 also giving the same confluence, right? For example, right? So if you see Accenture, right? You see there is from 5th Jan to 20th Jan, there is a high possibility for a move up, right? So if I go to Accenture, so now it came all the way to the bottom. So it came to the bottom, started moving up. So there is a high possibility for Accenture to move in the coming week. Now if I do bull put spreads here, my risk is minimal. If I came all the way to the bottom, and maybe we can start seeing, if you see 4 hours, already it came, it started moving up. It may go all the way to the top, right? Somewhere around 370, $380. Right? I hope it is making sense, like how you can use the confluence, how we can confidently take the trades 90-95% of the time, right? If I can buy the calls if I want, but if you want a low risk, you can you can basically, right? If I see the price pulse, so what I see, 3.2 million buy order block. Big companies are buying it a lot. That means if I do a bull put spread here, my risk is minimal. If stock stays here, I'll make money. If it goes up, I'll make money. If it comes little bit down, I'll make money. Because we are already, it came all the way to the oversold area. We are at a discount zone. There is a huge buy order block. Your risk is minimal now, right? Your risk is very, very minimal. If I do a bull put or if I collect the premiums, then I use some of that money by the call. So if it goes up suddenly tomorrow, if it gaps up or if it goes to 360, 370, you will make 100, 200% on your calls. Or even if it doesn't move, if it stays choppy also, you will make money with your bull put spreads. That is how we can use this strategy. We can use the confluence. Whenever you see some stocks looking good, then we can use and we can make nice profits. Why can't you do bull puts? You can always write, for example, no 352. All I can do is I can sell a 350 or 355 put. I can buy a 350 put, or I can do a I can sell 345. I can buy 340 because I know it may not come all the way below this zone. It will stay always above because there is 3.2 million buy orders here. So even if price comes here again, it will go up. Your risk is minimal. No, when you are doing bull put, it won't hold much money, right? If I'm selling a put, then it will it will hold your money. When you're doing a bull put, you don't need a big account. So let's look at some other examples, or yeah, some more stocks which can. So already I gave you two stocks which can move well: ASML, ACN, and then let's look at Adobe is also looking good. Let's go and look at Adobe, Adobe ADI. So what do you think, Adobe? If you do a bull put spread, it came all the way to the bottom. Now you are at a oversold area. Right now you have a lot of buyers started, right? They bought it here, some more buyers bought it here, some more buyers bought it here. If it breaks this one, then it can easily go to 450 plus. So now there is some resistance here, but if it there is a high possibility for it to break that, go to 450, and then we may see a drop. So if you are doing a bull put and collecting the premium, you can keep 100% of the premium. Right, yeah. Depending on the tickers, there are some tickers where your implied volatility will be very high. They are good for bull puts because you can that IV crush and theta decay, all those things will help you as a when you are doing a bull put spread. It will you can make much quicker gains. So, but yeah, do you see the power when last 35 years of data is indicating that stock will move in a certain period, and then you are also doing a confluence, then our risk is minimal. And you are instead of you can buy calls, you can buy stocks, you can do bull put spreads, right? Yeah, we are working with India stocks. Crypto, it won't work because you need to have 35 years of data to do the analysis to see like where we have 80-90% consistent rate. So this won't work for new stocks. If any stock like ARM is there, it is completely a new stock, so it won't work with that. But it works with stocks, ETFs, or India stocks, whichever has more than 30 plus years of history. We can look and we can find out what are the common weeks where the stock can move. And then we are not just depending on one tool. Once that gives it, then we will go here and check. If this also telling that it came all the way to the bottom, now I have very low risk because I am at a discount zone. I see that a lot of big companies are buying. Right, you can take a next monthly expiry. If we are doing now, you can do the Feb expiry. So then let's look at some more examples. Yeah, right, it is not only for bull, right? Let us take some example where, so for example, ACB, right? It is telling it is a bear zone from 15th to 30th January. It is telling there can be a high, bigger drop. So now if I go here, click on ACB, do you think T5 is telling it can go further down? Right? Everything is bearish here. Everything is red here, right? That means there is lot of bearishness and there is lot of strength in the trend. Whatever is the trend, there is lot of strength in that bearish trend. So there is a high possibility for ACB to drop much further, right? Still, there is a lot of gap between these two lines. That means now if you do a bear call spread or you buy a, right, you do a bear call spread somewhere here, then you can make huge profits. So from Jan 15th, right, the indicator is telling from Jan 15th to 30th, let's say there is a huge possibility for a bigger drop. So it is dropping so much. So that's it. All we need is look for those zones. If we get a confluence, 90% of the chance we'll make profits. Right? You can buy the puts, you can do bear call spread, you can short the stock, and you can make huge gains. So still another 2-3 days, we may see Yeah, more drop, right? As of now, there are no buy orders. Our buy orders are somewhere around 2.8. Now we are at 3.8. So there is a high possibility minimum until $3 or something. Yeah, you can trade cannabis stocks and options. Yeah, that should not create any problem. So again, right, we are still testing with India stocks and other things. Yeah, for US it is working very good. Our testing is still going on with other things. So, but yeah, for US we start, right. We'll give the alerts in the stocks channel. We'll give alerts in the options channel based on these things, and also for our premium indicators members, we'll share that okay, these stocks can go down. Check confluence with, right. If we tell that okay, these are the stocks which can go up or these are the stocks which can go down, they can check with T5 and Price Pulse. If they also tell the same thing, now they can make their subscription money in one trade, one or two trades they can make it. So once yeah the tool is completely tested with India stocks everything, then we'll open it up for subscription. But right? But until another 1 month, we may continue to test it for India, all others. But yeah, for US it is working perfectly, and that too we have multiple tools. So that is giving us the trigger. Based on that, we can use our price pulse T5, and then if these things are also telling the same thing, now your risk is minimal, right? There is a huge 1.7 million, 0.7 million sell order block. So if you do a bear call here, you sell this call, you buy some 5 call, sell 4 call. There is very minimal chance for it to go above that. Because again, if you try it, there are a lot of sellers here, lot of sellers here. Whenever it goes, it will come down. Again, tries to go up, it will come down. So that's how once you take time to learn, use the confluence, you can short, right? As long as you have right, if there is liquidity for that stock, you can short it. You can short ACP. Yeah, you can still make with the puts also, but I'm giving you a low risk option. If you give puts and if it stays choppy, you'll lose money. If you do a bear call spread, if it stays choppy also, you'll make money. Right? Because it already dropped from $5 to $3.8. Right? Let's look at some more examples. So, Baba, let's go and check Baba. So, Baba came all the way to the bottom. You can see a big buy order block. If it breaks this, right, already it touched one, two, three. Maybe this time it may break this. And if it goes above, then it can go all the way to $94. So there is already your 1 minute, 5, 15, 1 hour, all are bullish. So there is a high possibility we may see some good news tomorrow, day after, and then it may break this sell order block, go all the way to the top because it is already oversold since, right? We're trying to go up, consolidating. So there is a high possibility next week for us to see move on Baba. So again, if you do a bull put here, somewhere here, you sell the 80, 85 or 80 put, you buy 80 put, then all the premium is yours. All the premium collected is yours. So that's how we need to know the history is giving us, and then our indicators are telling the same thing. Then your risk is very minimal. You don't need to worry about losing your money. Becky is looking very bearish, 14 Jan to 29 Jan. Let's go and check for okay. It already dropped so much, but there is a huge sell order block here, right? That means it may touch this, and then again, right? Your price pulse is still red. It is not able to break it. So tomorrow, if we see another candle, then it may come all the way, right? Your discount zone is here. Now it is in a choppy zone. Tomorrow, if we see some bad news, it may come all the way from $17 to 15 or 14, right? This is where you have your buy orders, your discount zone, your 7.6 million. So even though it came to the bottom, there is still a high possibility for a drop because still you see a big sell order block here. There is a sell order block here. There is a sell order block here. So we can wait. If it comes little bit up and then starts dropping around this time, right? If it comes to 18.5, if you do a bear call, right? You sell 18.5 call, you buy some 20 call. Your risk is minimal. You can put, you can confidently trade, and there can be a drop. So and is another. So you can see it is dropping. It can drop further till another 4 5 days. It can continue to drop more. Right from nearly $3.2, it came to $2 now, and it can go all the way to 1.4 $1.5. Maybe Trump may do something with this all the cannabis stocks. So there is a high possibility for it to come will here. So if I do my bear call spread here, I sell my 2.5 call and buy 3 call. Your risk is minimal. You can keep all that money for yourself. To collect the premium, you can keep it because your T5 is telling it will drop, your price pulse is telling it will drop, and your buy order blocks are somewhere close to 1.5. So there is a huge possibility for a bigger drop. Yes, it also works for indices. QQQ is still looking very bullish. MCO is looking bullish. QLD 3rd June to 18th June. Yeah, QQQ is still overall bullish. It can go all the way to 530 tomorrow or next 2 3 days. We can see 530 or once it so your 540 is your all-time high. It may go one more time there, and then we may see a drop. And then QMO, QMCO, ULD. QLD is very bullish. 3.5 million started going up. It can go all the way minimum till 116. So from $102 to 116. So yeah, it works for indices, it works for ETFs, but it is not for day trading, right? This is more for swing trading. So as I said, if you bought a Micron, It said from January 1st to, again, if we go back to the slide, Micron is from 1st January to 16th January. Very good time. And you can see exactly from 1st January started moving up, moving up. Maybe tomorrow, day after, we may see a big drop. And there is a big sell order block. Now you know that whenever it starts dropping, you can do a bear call spread, right? It came all the way to the premium. You have a huge resistance here. So now you do a bear call spread. You sell your 115 call, buy 120 call. Then very, very minimal chance, right? Even you can do 110 bear call, right? You can sell 110, buy 115. Then whatever money you collect is completely yours because there is very minimal chance for it to break this and go up. Already you are at a premium zone. So you can basically, right, if you're collecting premium, you can wait until it comes all the way to the bottom. You can keep all the money. You can collect for this coming Friday or next Friday, next month expiry. You can keep all the premium for yourself. Right? Only from Jan 1st to Jan 16, 17, it was looking bullish. Tomorrow it may go one more day and then we'll start a big drop. So it will give you right. I'll post in the options channel when to take right time. Yeah, expiry should be 2 to 3 weeks away. Expiry. Yeah, we are taking swing trade, so you can collect huge premiums. So next to 5-10 days, let us say if it goes here and then drops, then you can keep. You will collect huge premiums. You are already at a premium zone. You have a huge sell order blocks. So tomorrow, if it goes little bit up, then we'll take the bear call spreads in the options channel. Then you can keep all the money. This is right around 106.72 is a strong resistance. Previous week high. It will go touch that and then there can be a big drop. It can come all the way till the bottom. Yes, you can apply it for SPY, QQQ, IWM, DIA. Yeah, it will drop for right. It won't keep going down. For next 2 weeks, maybe it will drop. Right? It may come all the way till 103. From 107, it may come all the way to 103. Whenever it comes this price, then you buy back at a lower price. You are collecting premium, right? Because they don't have this tool, they might be still very bullish. When it touches this, you are selling a 106 call, buying 110 call or something. So you are collecting some nice premiums. You'll go touch there and start dropping. Whenever it comes all the way to here, then again you buy back that spread at a lower price. You can keep 70-80% of the premium collected. Yeah, to get the order blocks, you need to have the price pulse indicator, which will show you where the big companies are buying and selling. E-Trade is good for, I don't know, I never used E-Trade, but the Thinkorswim, IBKR, they are the good platforms for bull puts and bear calls. And you can use, right, yeah, if you see it on SPX, if there is a huge sell order block. So, for example, right, around 60, 17, there is a huge sell order block. If it goes there, then there is a high chance for a drop, right? Tomorrow, day after, I may see one more time it will go up, then touch this previous week high. Then we may see a drop. At that point, if you do a bear call spread, right, because it went all the way to the top now. If it starts dropping, then you can make money, nice money. You collect the premiums. For next 2 weeks expiry or next Friday expiry, you can take it, collect the premiums, and then it will make nice profits. Yes, 252 is a big number. Yeah, you need to pay. Either you can connect to any brokerage. If you have brokerage, like for example, if you have IBKR or you have Webull, then they will give you the real-time data. You don't need to buy the data for stocks. But if you don't have any of these brokerages, then you have to uh, buy the data from those companies. No, buy data from TradingView. For Nasdaq, it will be $3. For all the tech stocks, it will be $3 per month. Yeah, 252 million sell orders, right? Yeah. No, when you see on 1 hour, you put a mark here, and then whenever I see that price is going to that level, I'll do a bear call spread, or I can do a short. I can buy the puts. Right in the 1 hour, you can always use, and you can mark your levels because 1 hour is a very strong signal compared to your 5 minute sell orders. If I have a big sell order block, I'll say 1 hour resistance, huge sell block. Now whenever I am in 5 minutes, right? Tomorrow we may see a move up and then it may start dropping. So whenever I am here, if I see some red candles, immediately we can do a bear call spread and you can keep all the premiums. You can do with 10 contracts, 20 contracts, 30 contracts. It will go all the way up again and then there can be a big drop. Yeah, bear call spread is basically where you are selling when you are bearish about something. You are you can either buy the puts or you can sell the calls. But if you sell the calls and if it starts moving up, you have a risk. So that's why what you are doing, you are selling a call and you are also buying a call little bit above. So you have a hedge, you have a protection. In case of sudden any major news or something, if it goes up, you have a protection. 95% it will drop because on a 1 hour you have a 250 plus million sell order block. It will drop, but you are so instead if you buy puts and if it stays choppy, you will lose money. But if you do a bear call spread, and if it stays choppy, you'll make money. If it drops, you'll make money. If it goes little bit up, also you'll make money. In all three scenarios, you'll make money. So that's why instead of doing just a naked put, you are doing a bear call and you can make huge profits. That's what we do when you see something bearish. You can, right? Or you are collecting, right? Let us say I sell 20, I do 20 contracts bear calls. Now I got some money. Use that money and buy some puts. So if it drops quickly, you make money with the puts. You are also making money with your bear calls. If not, still I can make profits with my bear calls. I may lose some profits because of the puts. But if there is a big drop and suddenly it goes to 59.80 or it goes all the way to 59.64, your puts can make huge profits. Your spreads are like low risk and medium returns. Your puts are high risk, high returns. So if you want to take low risk, we can do bear calls. If you want to take high risk, you can buy the puts or you use a combination. Take some here, take some puts so that now your risk is minimal because you are taking the money, using that money to buy the puts. Your capital is not impacted. Yeah, that's what you can sell a right. For example, if I'm here, I'll sell a 60-20 call. I'll buy a 60-30 call or 60-25 call because I'm thinking that there is very very minimal chance for stock to go above that price because there is a huge sell order. It went all the way to the top. That means in 1 hour it is in a overbought area. There is a huge big companies are selling off. There is a 253 million sell order block there. So it will do a double top and then there can be a big drop Tuesday or Wednesday. So whenever it touches it, if we do a bear call, we'll make huge profits. Yeah, it will drop from around 60.21. Yeah. Yes, for the peaks also it is working good. We are not buying 60.25. We are selling 60.25 and buy, because if you have to just to sell a call, you need to have very big account. And also you are taking lot of risk by doing a naked sell. That's why as a protection, you are also buying a call little bit above. Suddenly, right, 95% it will drop. But there is a 5% chance suddenly, let us say Trump announces some very positive news that he is giving 10,000 for every family or 10,000 to buy the stocks or something. Then suddenly market may go up so much. Right? China gave a lot of money for everybody to do trading for a low interest rates. Then all the China stocks went up. In the same way, if Trump gives something, even though there is a 300 million sell order block, if he announces something like that, it may. So that's why to avoid such type of risk, we are also buying a call. We are selling a call because 95% it will go and drop, but 5% you always have a risk. That's why you are also selling some call here. So even if it suddenly goes up, also your risk is minimal. If it stays choppy, you'll make money. If it goes about that one also, you have a small risk. You may have a small loss. If it drops, all the money collected is yours. If it stays choppy, all the money collected is yours. If it goes up, you will have a small risk. If it goes up above that 60/30, yeah, we can use 5 points above like that. Right? If it is in 1 hour, if it is at the top, then you can use even 10 points up. In 5 minutes, if it is up, you can use 5 points up like that. So yeah, maybe tomorrow we'll see a very good opportunity there. We can make a lot of money with the bear call spreads with tomorrow afternoon or something. Right? Today evening again we may see stock going and QE is going up. Right? As I said, you have top step trader where, right, because it came all the way to the bottom now. Now it will start moving up, go up tomorrow sometime, right? Because Trump taking the oath and all those things, so we may see a positive market. It will go up and then it will do in the 1 hour. You are at the top. It may do go up, touch this previous week high, which is around 60.21, and then we will see a big drop tomorrow. So whenever it touches it, if we do puts or if we do bear call spreads, we'll make nice profits. Sorry, I mean Tuesday. Yeah, tomorrow futures market is open from evening to tomorrow noon. Options is closed, but yeah, we can take that on a Tuesday. Yeah, tomorrow is holiday, but on Tuesday we can see a big move up and then we'll see a drop later. Maybe first 15-20 minutes or 1 hour we may see a bullish, and then last 1 hour we may see a big drop. Generally, futures market is 5 p.m. to 4 p.m. Options is from 8:30 a.m. Central to 3 p.m. same day, whereas futures is 5 p.m. to 4 p.m. Central next day. And because of holiday, tomorrow it closes at 12. But if we use our strategy, right, if, for example, right, as I said, if your price pulse, right, we have mainly three indicators, right? One is your T55, top trend, price pulse, and T5. So generally your T55 will give a strong sell. If it went all the way to the top, it started dropping, you got a strong sell. Your T5 line is red, your price pulse line is red. So it gave a strong sell, right? It is at the top, it is overbought, started dropping. You got a strong sell at a premium area. That means there will be a lot of sellers always at the premium area. You can see a big sell order block. You got a strong sell. Now, so my price pulse is telling it will go down. My T5 is telling it will go down. My T55 is telling it will go down. If my top trend also, I see a sell signal. then it is right. You are 99% confident you will make huge money. So it is like, right, when you want to buy a home or something, or you want to buy a car, if 10 of your friends are telling that Tesla is best, you will buy Tesla. If 10 of them are telling, right, oh, everybody is buying Tesla, don't buy Tesla, buy some BMW or something, you'll buy that. In the same way, if this T5, it went all the way to the top, started dropping. Your T55 is looking at price pulse, looking at T5, it is giving a strong sell signal. Your top trend, price went all the way to the top of the channel, touched the pivot points, it gave a sell signal. So now your risk is minimal. When you take a signal, you easily make 400, 500, $600 with each account, and you copy that into 10, 20 accounts. All we are doing is you check for the confluence. You are not just depending on one indicator. You are looking at two, three indicators. If all of them are telling the same thing, your risk is minimal. You copy the trade into 10, 20, 30 accounts, and even if you make $300 in the trade, right, this would have made some $2,000 with one contract. But even if you take 200, 300 and copy it into 20, 30 accounts, funded accounts, that is a $3, $4,000 per day, right? Like that, every day you will have with gold or NQ or ES, you will have that such type of setup where it will go all the way to the top. Now you see, right? It went all the way to the top, started dropping. Your T5 gave a sell signal. Then if I go and T55 and go to the top trend gave a sell signal. It went touch with the resistance. I got the sell signal. Price pulse became red. So now all the indicators are giving the same signal. Your risk is minimal. It went all the way down. It would have made some $4,000, $5,000 with one contract. Right? From nearly 2760, it went all the way to 2730. So we need to wait for that either oversold condition or wait for the overbought condition. When it is somewhere like this, moving up and down, don't take it. Once it starts, right now, gold may start going up. Right now, it came all the way to the bottom. There is a gap. That means buyers are taking control. They may take it. Now, you got a strong buy. You got a buy. You got a green background. You got a green cloud. It may go a little bit, right? It may go all the way to 2741 or something. Touch this cloud and then drop again. So, yeah, we have to wait for such type of opportunities, and then you have unlimited potential because you can copy the same trade into 100 accounts or 20 accounts or whatever you need. Right? Waiting for that setup, you can set an alert. You go to our P5 indicator and set on trend change. So whenever it goes to the top and starts dropping, you will get a notification. Whenever it goes to the complete bottom and starts going up, you will get a notification. When you get that notification, you go to price pulse and check, okay, is my price pulse blue? Okay, it is blue. Good. Is my T55 gave a strong buy? Yes, it gave a strong buy. Is my top trend gave a buy? Yes, it gave it. So now your risk is minimal, right? You are not taking some trade with a FOMO. You are taking with a proper systematic approach, with a proper discipline. Okay, my this came all the way to the bottom and it started moving up. Price pulse, it was red all this time, it turned to blue. I can see some lot of discount zone, some buyers, there are more buyers. That means now everybody is pushing the price up. So it can go all the way to the next sell order block. You can take profits around 2742. From here to here is nearly $400-$500 with one contract, with one account. And if you copy that into 10, 20 accounts, you are done for the day. All you need is one trade like this. So if you set those alerts on the trend change, whenever you get that alert, you just check, okay, is my price pulse looking good? Am I close to discount? Am I seeing some fair value gaps? Am I seeing my top trend is looking good? If all of them are looking good, you can confidently go and take the trades and easily make some nice profits. That's it. Just if you follow that systematic approach, have a system and just follow those rules, Every day you can make a four-figure, five-figure income without taking a risk. If you don't see the confluence, then don't take it. If, for example, if top trend is showing sell and price pulse is showing buy, then don't take it. Right? If all of them are telling the same thing, then that is the best opportunity. If all of them are telling it will go up, take it. If all of them are telling it will go down, take it. If some are two are telling it will go up, some two are telling it will go down, don't take that, right? Because there will be 20, 30, 50 opportunities every day. You don't need to definitely take NQ or gold or something. If not gold, you may get opportunity with ES. If not ES, you may get opportunity with Tesla. If not some, so all we need is wait for that confluence where you have the same type of right result or same type of indication from all the indicators. Then your risk is minimal, right? Your risk is only 2%, 3%. That's it we need to do. That's why, right? Otherwise, you can just make money with price pulse or just you can make with top trend. But if you are using all the four, and if all the four are telling the same thing, now your risk is close to minimal, 0%, 1%. That's it we need to do. And if you use that approach, you will be consistently successful in converting your ES to PS, PS to payouts, or you can use your individual accounts, take the trades. You can do options, you can do stocks, you can do futures. You can use the historical that profit zone indicator. We can make money for the swing. So this is mainly for day trading, right? We'll use 5 minutes. You use the confluence and take it. Let us say you are completely very busy with your jobs and other things, right? You don't want to uh, put lot of time. You can do it in the evenings, but still, let us say you are not interested. Then you go with the profit zone indicator. If that is telling something, then you go here in the daily and see, okay, in daily, am I close to the bottom? Or if that indicator is telling that, so now you see, right, for gold, it went all the way up. Now you are at a huge sell order block. That means for a long term, for a swing trade, you are at a resistance, big resistance. It may come. Maximum, it will go, it may drop all the way to 2609 in next 3 4 days. And all the way up, start dropping tomorrow, day after, in a big way. Right, as I said, profit zone indicator we are still testing. That will take time. Yeah, gold you can do it as futures. You can do it as right. If you want to futures, you have to do GC. If you want to buy stock, you have to do GLD. Or you want to buy options, you can buy options. Right? You can do puts here. You can see 1.3 million sell order block. That means if I do a bull put or bear call spread here, my risk is minimal. We may see a drop on GLD tomorrow. Yeah, for GC, you need to have a prop account or yeah. So that's it, everyone. So again, right, when you have powerful tools, your trading will not be a gamble. One is you need to have the best tools. Second is you need to have the discipline and patience. Then you can make a lot more than what you make in a IT job or what you make in any other business. You can make huge money. So only those two things are important for you to be successful. One is having the tools which will tell you when to buy, when to sell. Second thing is we have to. So when we take a bull put, as I said, right, that Accenture example, you are already at a bottom. You are close to a support. You see a huge buy order block. It came all the way to the bottom. You are in a oversold area. Then from tomorrow, you may see a nice move on Accenture. It will go also. Now, if I do a bull put, if I sell this 350 put and I buy some 340 put, you are collecting premiums, right? Because somebody is thinking that it will go further down. They don't have all these tools. They are just trading based on emotions. So you are selling this 350 put, buying 340 put, and you are collecting premium, right? You are like an insurance company now. You are telling them that, okay, even if uh, Accenture goes below 350, I'll buy them at 350. Right? You pay me some premium, I will buy or I'll sell, I'll take stocks from you at 350. So he's thinking that Accenture may drop and he's paying insurance to you. You collected the premiums because you know that we are already oversold. It came all the way to the bottom. Big companies are doing a huge buy. So tomorrow it can go all the way to the top, right? It may go all the way to 370 plus in next 4 5 days. So all the money you collected is yours, right? For example, you know that there won't be any car accidents. It is like you are somebody is buying a insurance for that car. You collected the premiums. If nothing happened to him, all that money is yours. In the same way, that person is buying insurance because he is thinking Accenture may go further down. But because you have a tool, you know that your profit zone is telling Accenture will go up from based on last 35 years of history, it will go up. This price pulse is telling we have a huge buy order blocks. Lot of big companies are going taking it. Your top trend is telling you are at a strong support area, it will go up. Your T5 is telling you came all the way to the bottom, you will go up. Your T55 may give a strong buy tomorrow. No, everything is telling it will go up. No, you take the advantage, collect the money, and it is like you free money. You keep all that money for yourself because there is right. Even if stock stays here, it goes up, comes down, goes up, comes down. All that money is yours as long as it is above that 350 price, or even if it stays between 350 to 345, all that money is yours. Yeah, yeah, that's it, everyone. So if you use proper tools with a proper discipline, proper knowledge, you can make huge money in market. If you do just with emotions without understanding what you are doing, there can be a big risk. ABKR trading view options you cannot directly do for US market. Still, they did not include the option chains in trading view. In India market, they did. So, HIMS, yeah, HIMS, there is a huge sell order block here. So it may go little bit up, but again touch that and then again drop. So still it is only if it breaks out this price. If it goes above this, then it can go all the way to $34. But as of now, it is still looking bearish. Yeah, if you have to go with only three indicators, what I suggest is you can go with price pulse, T55 and T5. But yeah, if you have top trend also, that will be a great confluence. If all the four are telling same thing, then your risk is very minimal because top trend will give you strong support, strong resistance areas. And if price pulse T55, T5 and top trend are telling the same thing, then your risk is 0% or 1%. Mm. This stage has started moving, but there is a lot of block here. It may go to 67, 68. Around 68, it will drop again. We are already overbought. NXPA is looking good. So it came all the way to the bottom. It started moving up. Right. Tomorrow, if it breaks this, it may go all the way to $236. So now let us go and see what our this one is telling. Control F NXPA 20th Jan to 21st March. So you can see NXPA should go on. So this is also telling the same thing. So from 20th January, if I do a bull put spread, it can easily go to $236. You can buy calls of Feb expiry. Then if it starts moving up, then you can make 100 to 100% on the calls. Or you can do a bull put spread. You sell the put, then all the premium is yours. So everything is looking bullish. Momentum is looking good. Yeah, tomorrow, day after, we may see a big breakout, and it can go all the way to 235 in the next 1 week, 2 weeks. So if you do a bull put, your risk is minimal. Right, again, your profit zone indicator is telling from Jan 20th, it is very good time to buy this stock. Now you are right. I'm hiding one by one. Now it came to a strong support area. It started moving. Where this one became green. The cloud, bottom cloud became green. So most probably tomorrow it will break out this cloud until minimum $232 is minimum. But it can your resistance is at 236. So your top trend is also telling NXPA is very good stock to to go long. You can buy the stock. If you don't want to trade options, you can buy the stock. Your stop loss can be somewhere here. Your target is 235 to 36. Your T55, maybe tomorrow will get a strong buy, not on Tuesday. Price pulse, you can see a lot of big buyers. So there was some consolidation and finally some buyers are pushing it up. There is a big fair value gap. That means there is very minimal chance for price to go below this. So you can do a bull put here. So even if it comes here, again the buyers here will push the price up. Now if you see E5, you got the trend change. It was in consolidation choppy, squeeze. Finally the squeeze is over. The buyers started taking the control and they will take it all the way up. So just this one alert is enough for you to cover your subscription fee. Yeah, right? Whether options or indicators, whatever it is, just you take this bull put tomorrow, you will make few $100 by this Friday. You do a bull put or you do a call, you can make huge profits. Right? Whatever you collect premium, and with some of that premium, you buy a call. If it goes quickly goes up, you'll make 100 to 100% on your calls. If it stays choppy, your bull puts will make profit. Even if it comes back, again you will make nice profits. So yeah, your risk is minimal if you do a bull put here on an XPA. Yeah, you will receive the recordings for the option training, Rajshekar. Uh, please check for BA. BA is anything bullish. Let us see what this one is to be. As per this indicator, BA is not there for January. But yeah, as per this one, it is okay setup, right? It is trying, but it is not a zero, right? It is not very low risk. You are somewhere in the middle, and from middle it is starting to bounce back. It is still, yeah. So yeah, there is a little risk, not a very, right? An XPA is a perfect setup. You'll definitely make nice profits with an XPA calls or pull puts. BA is right. If you see BA, it is somewhere in the middle. If you buy at the bottom, if you sell at the top, your risk is minimal. You are somewhere in the middle. It may go a little bit up and again start dropping. So, and this one is also still the distance is far. So it may, yeah, it is like 60-40. 60% it may go up, 40% it may go down. Not a great perfect setup. Yeah, only an XPI will go take 5 minutes, right? On the high level, you only do the planning. And then you go to 5 minutes. Whenever it comes to the bottom, you do the bull puts. Right? Higher time frames is just for your planning purpose. That will show you what is the big level picture. In big level picture, it came in daily, it came to the bottom, started moving up. Now I will go to 5 minutes. Whenever I get a right, I'll go and create an alert. in XPI whenever it comes. Uh, Whenever there is a trend change, right? Again, it may do a drop and then start moving up big. Like that, yeah. Higher time frames for planning purpose, lower time frames for your execution purpose. 1 hour time frame basically for your planning you can use to understand, right? If I want to know if an XPA is bullish or not. Okay, it is bullish. So if 1 hour if it is bullish, then in 5 minutes I'll only take bullish trades. I'll only do bull puts or I'll only do calls. Because I see that in 1 hour there is a huge buyers. There's a lot of buyers here. Your price is above the price pulse, above the. So now I see there is a high possibility for it to go all the way minimum till $222. So now I'll go to 5 minutes. I can go add an XPI. Right now I can put a green. So that means I want to only whenever there is a drop and starts moving up, I want to only buy calls. I want to buy the stock. I want to do bull puts on an XPI, on Accenture, or on ASML, or on Amat. Right, if I add app, then these ones I'll only look for the puts. These ones I'll only look for the calls. Like that, in the higher time frame, will help you to identify what is the bigger overall trend. And then in the lower time frame, you can take the trades in the similar direction. So if I go to GC, 1 hour. So in 1 hour, what do you think GC can have, right? What can happen to GC? There is, it went all the way to the top, started dropping, a small pullback, and again started dropping. So there is a higher possibility for it to come all the way till 27, 27.19, right? We come here, go a little bit up, again drop, go a little bit up and again drop, touch this 27.20 and then go up. So if I focus, so today evening, if I want to take gold trades, I'll only take short, short opportunities because I see it went all the way to the premium. Lot of sellers, lot of sell orders, T5 is red, price pulse is red. So the pullbacks are only for small time, right? And then it will go up and then drop. There is a buy order block, it may go up and then drop. Finally, it will touch the previous day low and then there can be a bounce. But yeah, it may come all the way to 2675 in the next 1 week or 10 days because it should come all the way to the bottom. Overall, sellers are in control now. So like that, if you before even the market opens, you go to 1 hour and check whether it is bullish or bearish, and then you try to take the trades in the same direction. Then you won't fail in the prop accounts or in your trades because you know what is the high level picture. In the smaller time frames, now you take trades in that direction. You will be successful. Whenever it goes to the top and starts dropping, you take it. Unless you are a quick scalper, you can quickly take the profits. Look at the higher time frame and just focus on the higher, right? It may go all the way to here and then drop. So if you're a quick scalper, you have to book profits quickly. You should not think like, oh, it will go all the way here, or you should not wait for it to go all the way to the top. Right? Only when it is very bullish, it will go all the way to the top. If it is bearish, it will come down, do a small pullback, come down, do a small pullback. So it is creating lower lows. This is a lower low, this is a lower low. It may go further down, create a lower low, again go a little bit up, again come all the way till the discount zone. So yeah, identify the higher time frame trend, and then in the lower time frame, you take trades in the direction that will help you to be successful. Crude oil, crude oil came to the bottom. Maybe yeah, still as of now, still bears are in control. Sellers are in control as of now. Maybe we may see it dropping further. This is where it will reverse again. 75.64. It may, or minimum, it may come all the way till the EMA 200 and then start moving up again. And then again, it will go again. Finally, it will come all the way here, where again it will turn bullish. So as of now, it is turning bearish in all the time frames. In 1 minute it turned, 5 minutes it turned, 15 it turned, then 1 hour, 4 hours also will become bearish. Yeah. Okay, everyone, right? That's what if you use proper concepts, proper knowledge, you'll be successful 90-95% of the time. So yeah, there is a lot of money to be made in trading if you understand things and if you trade in the right direction. So yeah, we'll start taking some live trades today evening with gold, crude oil, natural gas, because in the evening time it is much more easy to make profits. In the morning time there will be a lot of volatility. If you are experienced trader, morning times are good. If you are new trader, evening times are good for you to make profits with futures or so. Yeah, I'll do some live session today evening, and we can take trades in the live. Okay, everyone. Have a nice rest of the day. Bye.